We should have a little perspective on this because as a whole, in terms of the total number of the workforce for Amazon, this is minuscule, right? Less than 1%. Let's go to Doug Flynn, co-founder at Flynn Capital Management, on this and more. Get to the stock market in a moment. Finally get an update for the Dow, maybe. First, here's what the Amazon workers, some of them, have been saying about this. Let's listen.
Amazon will refuse to negotiate with us. They'll refuse to recognize us. They'll refuse to work with us, even though we're the ones who work for them every single day and deliver hundreds of thousands of packages all across this country.
For Amazon to tell us that we are not Amazon drivers, when we wear Amazon vests, we deliver in Amazon vans, we use phones that have Amazon apps on it when it comes down to delivering the packages to the customers. So it's not okay.
All right. Two things then. What would you say about the strike and the issues? This has been an issue for Amazon now for a number of years. And number two, impact on the holiday season. If it's less than 1% of the workforce, wouldn't seem like much. But what do you say?
Right. Well, it's interesting how they're phrasing it. It's an important distinction because Amazon is saying these are not technically employees. These are subcontracted, third-party, independent workers that work for a subcontractor. So they're not directly Amazon employees. So that's why Amazon is saying, you know, this isn't as big a deal as they're making it out to be. It's not affecting the vast majority of the workforce because it's not a unionized workforce. But you know, their demands are important, and to that end, as they were trying to unionize, Amazon did raise the wages, do some health care benefits, and do some things for these workers. But I don't know how much play they're going to get, which is why Amazon is also saying this, you know, 1% of the workforce isn't going to disrupt your Christmas delivery, even if you waited to the last minute, like many people often do. So
like some people you know, is that what you're trying to say? Yeah, but like,
no,
you want to still be able to say it will be delivered by today at 2 p.m. as sometimes when you order something in the morning on Amazon. All right, let's talk about the stock market for a moment. You and I at this time yesterday were looking at a Dow that was down over 1,000 points, and it was the 10th day in a row that it moved lower. Now, it looks like the Dow, well, I don't want to speak too soon, still got 2.5 minutes left. Forget it. I was going to say it looks like we'll snap that streak, but this is from yesterday. Okay, and yesterday, we might. This is yesterday. I said, my God, I hope we haven't fallen another 1,100 points. That was yesterday. It looks like we might snap that streak and get a little bit higher, but this has been something 10 days in a row. So, all right, so what do you say about it?
Yeah, it's all about the uncertainty about interest rates going forward from here and how much of a cut they're going to get. So this is the carryover from yesterday. It's a good sign if you end up relatively flat. A little positive would be nice. That's somewhat normal, but anywhere in around here, less than plus or minus 0.5% is really meaningless. Yesterday was a big move, kind of adjusting to the fact that you're not going to get all the rate cuts that everyone was anticipating, and it really remains to be seen how it's going to go with Trump's tariffs and whether that's going to increase inflation, and which is why the Fed is saying we're just going to hang out for a month or two and see what happens. And if it doesn't raise inflation, then we can come back around to it.
Yeah, right. So now they're pricing in, I think, 2 rate cuts for next year. Now, just in the next couple of weeks, how does the end of the year play into the stock market action that we're looking at right now, do you think?
Yeah, at the end of the year, there's some seasonality. There's a Santa Claus rally on Wall Street, as we say. And what that is the last 2 weeks of the year is generally positive. It's positive about 75 to 80% of the time. Average is about 1.5% overall. But those are just averages. Right. That doesn't happen every single year. But seasonality is such that you do get that. A lot of the traders, a lot of the sellers are on vacation. So just the buyers show up. That kind of moves the market up a little bit on some of those half days and other things that we'll have on Christmas Eve and whatnot.
But now we've seen some profit taking, you think, in terms of
definitely from the election and for the year, a lot of growth. Back-to-back 20+% years. You don't have that often. So people are saying, I'm going to book some profits. Of course, maybe I'll carry some into next year. But there's a January effect that goes on, too. So you can kind of lead right in here. But it wouldn't surprise me if you just kind of meander around here, relatively plus or minus 0 for the rest of the year, even though seasonality should have us a little bit positive.
Thank you, Doug. We'll talk to you soon. Doug Flynn with us there.